Yo, 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 yo. It's your boy Mind Dialogue. Back on the scene, a little bit serene, but always relatively keen to all the charting schemes. What's up, Dialoguers? It's your boy back again, bringing you some fun stuff for us to go over, give you a couple updates. Um, for this particular video, I'm actually gonna walk you through at least one of the trades that I took over the last couple days. So I took a trade yesterday, got like 20% on it, nothing too crazy, like one contract, um, pretty inexpensive. Same thing today, which is the 24th of July. It's now 7:43 p.m., but I think I got like 30 or 40% on the trade today. So I'm just gonna walk you through like what happened, me setting up the analysis, and what led me to take the trade and how I had to adjust in real time when I got ready to enter. So before all of that, everybody, I want to apologize. Going back to some of my videos, I hear myself sniffling and just like I got my nasal. I naturally talk almost like from a nasal diaphragm, from my nasal palate, essentially. But it's been a little worse lately because my allergies have been kicking my butt. I'm not sure what it is. I need to get like a diffuser up in here or something, but my allergies have been absolutely kicking my butt. And so you hear me doing a lot of sniffling. I'm going to try to minimize that so that you have a better experience while watching the video. So I do want to apologize for that up front. But since that's out the way, let's jump into some things. So as I told you, one of the trades that I'm going to share with you that I took was a trade on the S&P 500, or SPY, SPY, which is a ticker symbol for the S&P 500. And so I'm going to walk you through kind of what took place this morning. So last night I was doing my analysis. I went on like the daily 4-hour, just started looking at the frame of things and where we were at structurally. We keep making these all-time highs and we're just we continue inching up. Went on the hour. The hour gave me, for me in my analysis, the hour gave me kind of the best view I needed for analysis and framing out just the structure of price action. And so as you can kind of see here, I was able to capture a channel that we were essentially creeping up along. Had a couple manipulations outside of for like a more tight, smaller channel up top. But once I did the analysis, I was able to identify a 2.618% discount level on the 1 hour time frame. And so if you remember with the fib, right? So I'm going to give you an example real quick. So let's say we take the Fibonacci retracement tool and we measure this range, right? From low to high. You get this level right here, 0.618, or essentially when you round it up, it rounds, or when you round it to the next like 1/10 of a place, right? The 1/10th place, you get 62%. Hopefully I'm saying that right. But because it wouldn't be, we can't round up to the next 10 because we can, but in terms of the math of it, 0.618 doesn't round to like it can't go up to 70 because we're still at 60.64 or lower, if you remember how to round in math. It's typically, from what I remember, it is anything, I believe, what was it? I think it was like 0.4, like if let's say we're rounding to let's say we were at you know, 45, for example, right? 45 would round to 50, or for example, let's say we were at, um, I believe it's like, I can't remember off the top of my head. I'd have to do some reviewing, but essentially, when you're rounding, I believe it was like anything from like 0.5 and higher would round to one whole, and I believe it was like 0.44 would round down, if I'm not mistaken. I don't remember the actual details, but nonetheless, when you're rounding, you have 0.618. The 8 that's in the, I believe, what is it, 10 hundreds? I think the 8 is in the thousandths place, if I remember correctly. Makes the one next to it round up to the next number, which is 2. So you'd have 0.62 or 62% in percentage. It's 0.62 in decimal. But nonetheless, you have this 0.62 or 62%. The 2.618% that I found is basically just 2 whole standard deviations from that 0.618 level. 1 whole standard deviation would be 1.618 from, so basically, if you add 1 whole or 1 to 0.618, you get 1.618. And if you add 1 more whole to 1.618, you get 2.618. So I was messing around with some measurement and found an area that I liked and did a measurement so that I can see the levels retrace up top in the opposite direction, right? So when I measured it, I'll give you an example. So this one right here, I just measured from bottom to top, and it retraced, the levels retraced down or to the bottom. If I were to take that same range and measure it from top to bottom, with what we have here, we have the levels retracing up top. So it gives me some of these different levels or whatnot. So I was able to find a 2.618% level that I liked. And so my whole thought was I wanted us to, and right now we're on the hourly time frame. We're going to go down on the 5-minute time frame because that's where I took my entry. What I was expecting to happen was market open and we would fly to go take the discount level. And once we did that, I mean, it's a lot to take in since market open. You know, the market opened at like 6:30. So no, I'm wrong. That was Wednesday. My bad, y'all. The market opened. Let's see here. So yeah, the market opened at 6:35, right? So I wanted them to go fly and take this 2.618% discount level on the 1 hour time frame. And I'm gonna increase this text real quick so you can kind of see what my mindset was. Let's do it to 20 so you can see it bigger. So you can see I say in parentheses, entry off of sweep of first closed high. So what I wanted to happen was I wanted us to go and take that discount level, that 2.618 discount level, close above it, have those highs. Once we closed above it, I wanted the highs to get taken out to the upside or get swept to the upside or breached or go higher than where the high of when we closed above the level. And I'll give you an example of what I mean by that. And then once we swept those highs, I wanted to take the reversal move back down to a really key level. So I'm going to tell you what that level was. So, you know, in doing my analysis on the 4 hour, I found a very hidden, subtle, just super discreet bullish volume imbalance that I thought would be very important, that would come into play and would stand out as a level of importance for today's price action. So you can see here, let me make this a different color real quick. Let's make this, see, does that look better? No, I don't like how that looks. Let's see, can we make it purple? We can. We'll make it a little darker, and we'll make it a lighter purple. So let's do that. So you can't see it in the, like the normal scale of the chart. And so I had to really stretch it out on the 4 hour. Let's see if we can see it here. So let me move this for a moment. So just looking at it at normal scale, and I'm gonna remove this line too. Just looking at it at normal scale, you won't be able to tell right away that there's a gap or bullish volume imbalance right here from this candle to the next candle, right? And so, but I've been looking at, as I indicated before, once you look at this so much, your eyes begin getting trained, your eyes become trained to certain areas that look a little bit off, right? And so that's what happened with me. I'm like, I think I was doing some type of measurement, and I wanted to see, once we broke these highs and did my whole entry model that I like, I felt like we wanted to come back down here to tap this 4 hour bullish volume imbalance, right? Or actually, once we swept here, I wanted us to come back down and take profit here, a little bit above the bullish volume imbalance, actually, because I had a trend line that I didn't really think we would get back that low, because this trend line was going to keep us away from there. So if I stretch the chart out, you'll be able to see it, right? Look at that. You see that gap right there? That's what I'm talking about. So from this candle, this 4 hour candle, price gaps up slightly and opens up right here. So let me just mark it out real quick. So price closed right there on that previous 4 hour. Once that 4 hour candle was done, we then gapped up and opened here. I'm gonna make this a black line real quick. Oh no, orange. We gapped up and opened there, leaving this little spatial area, gap or void, in price action that they'll end up trading back down inside of to balance out. So that was a key area for me. Let me undo some of this so we can get back to business. There we go. And then let's put this back here. Let's go back to the 1 hour. All right. So I don't know why the circle is doing this right now. Whatever. But in this gap right here, I'm going to take this out. In this little gap right here, this was a 4 hour, and it's bullish because it's going up. Whenever I say bullish, it indicates price action to the upside. If I say bearish, I'm referencing price action to the downside, right? So that's what I was looking for. I was looking for us to open, because look at where we opened at in relation to that discount level. We opened at 635.13 roughly, and the discount level was, what's that? That's like 34 cents away. So I didn't think it was like any issue for us to go get it. But the interesting and fun part about trading, or not so fun sometimes, is things will happen in a way that you did not intend, and you have to adjust in real time. So what happened was, we opened up, but instead of going to get the discount level, they ran puts or a downside move. They went to manipulate down first, right? They went to go take out lows first. Then they popped all the way up above the discount level and closed right on the discount level, right? And that's the sequence of what happened. So I had to adjust in real time, and I'm going to tell you what made me adjust and actually end up taking a move up instead of the move I really wanted to take to go down or get a reversal, right? And the move that I wanted to take ended up happening, but it just happened after the move up, which is what I anticipated, but it didn't happen first. So, and if you can see here, this is a key discount level because we only had this spin top doji looking candle to actually close above the level. That first hour, we closed right on the level. And if you could look what happened after that, we just left a bunch of wicks above that level. In real time, it looked like bodies were going to be formed in a healthy way above the level, but they sold it all the way back down, and we cannot get above that level yet. Even right now, as aftermarket trading is about to end. And just as a heads up, we as retail traders cannot trade in the aftermarket like institutions and hedge funds and all those other folks who have like special access to the market. Now we can trade and put in like what they call limit orders, but they will not get executed until the next day when the market opens. So you can trade in the aftermarket and in the pre-market. Aftermarket takes place from 4 p.m. to 8 p.m. For SPY, technically 4:15 p.m. to 8 p.m. because you can actually make a trade up until like 4:15 or 4:14 p.m. and then aftermarket trading takes place. It's just ended just now, and if you can see, this hour candle almost ends as a hammer candle. Looks like a hammer, right? You have your mallet piece up top and you got the stem piece. Hammer candles signify that a bullish move is coming or an upward move is coming, and that's what we've been doing. We've been moving up, so they might come back down for a reprieve and then push up, or they might just gap up in the morning once pre-market opens. Pre-market opens at 4 a.m. until 9:29 a.m. The market opens at 9:30 a.m. So those are the things I was watching. So let's go down on the 5-minute so I can give you some context of what happened today and why I had to switch my bias quickly to take a different move than what I anticipated. So the contract that I chose was a next day contract, or 1 day, meaning it expired the next day. So like if I entered the trade today and I forgot about the trade, or let's say I didn't want to sell today, I would have to sell it by tomorrow, or it would expire like worthless, essentially. Like I would lose my money in the way in which I traded it. Right? But whenever I get into contracts like that, my intentions most times is never to really hold it overnight. But let's walk through quickly why my bias changed, right? And I noticed some things as I got ready to jump into trade. So if we go over here, let's see what happens. Let's make the slider now. And then we're going to change the color. All right. So let's check this out of what happened. So let's look at this. So this blue area here, that represents aftermarket trading. So like, well, technically aftermarket starts at 4, but you can actually trade and get out or get into a position before that time is cut off at 4:15, and just general aftermarket trading will continue up until 8 p.m. So last night or yesterday evening, once after market started, they manipulate. Now, mind you, last night when I was doing my analysis and I found this 4 hour bullish volume imbalance, I wasn't paying attention to all the stuff that happened previously. I just happened to start paying attention to it because I found it and I had made up in my mind I was going to enter a trade. So you can see here once, because I extended it all the way left, right. So in future, you can see how price action responds to it. And you could also see how it responded in the past to it. It's not going to show anything there because we've never been this high before, only right here, right? So what happens in the past is they opened up slightly above it, made an aggressive move up. They bought this up all the way, sold it all the way down, and then closed here. Then they did, all their stuff, bought it up, this aggressive green candle. This was your first real manipulation right here. So this took place at 4:25 p.m. on Wednesday. And the reason I say this is a manipulation because look at the sequence of what happened with price action. Remember, red candles go down, right? They manipulate up or they open at the top of the body of the candle. They buy it up to make a high. They sell it all the way down to make a low. If it has a wick like this, that's the low. On this full body candle, there is no wick. So what's interesting is the low was also where they closed at. For this particular candle, which is again is a hammer candle, signals a bullish move is coming. And this is a sell down hammer. So you see they sold it down after it showed up, and then you got the bullish move. But they sell it down to a low and then it closes. So the reason I say this is the first manipulation is because this red candle closed down here below the 4 hour bullish volume imbalance. And you have to imagine 4 hours of trading is a lot of time. So things that happen on the 4 hour are very, very important and key, and they must be paid attention to, especially if they're happening in a distinct way. So it manipulates because they come down and close below here, but after that they open up and then they pop right back above it, and to make this move to take out this high over here, right? So this is your first manipulation. And look, they took out this high up top right here, right? Because if I was to draw a horizontal line where the high was made, at 634.86. Look, they clearly took out this high with this green candle. Then they teetered on it a little bit and began coming down. So that was the first manipulation. The next manipulation comes right here where we open in pre-market at 4 a.m. They open here, they buy it above it, sell it all the way back down, and then they close down here. They close below, actually close below it again on this green candle. But again, this is a hammer candle, which signifies what? A bullish or strong upward movement preparing to take place. And look what happened as a result after that. They gap up in the next 5 minutes. When the next 5 minutes starts, they gap up. So they leave this gap here. This is a bullish volume imbalance, right? There's an imbalance here. It's a void. It's a gap, right? And then they end up closing above the line. That was a manipulation. And you have this this looks like a shooting stick. I think they call it like a shooting star candle. Let's see if the indicator lets us know. Hopefully I'm not wrong. But if I am, I will admit it. Let's see. Why is this thing not showing up? Is it not showing up because it's because it only shows. I gotta figure out a way to make these things show up in the future. Let me see if I can find one where they do indicate what it is. Let's see. None there. That's the 5 minute. Let's go on. Let's see if we get anything on the 15 minute. Do they? I'm trying to find a shooting star or a shooter candle so you can see what that looks like. Oh, they're up there. They're just too high. I'm tripping. I need to make these come lower. This is out of control. I don't know why they got these shooters, the labels so high. I'm gonna fix that later. Nonetheless, make sure we're still on time. 5. All right, we gotta hurry up. So a shooter is, so yeah, it looks similar to a shooter. It's right here. Let me get this. Boom. So this candle right here is a shooter type candle where you have the bulk or the body of the candle towards the lower end. And again, this type of candle, if I'm not mistaken, signifies like a bullish reversal is coming. Meaning, bullish means to go up, but they're going to do it in a reversing sequence. So you see this, the candle shows up, they sell it down, and then reverse in a bullish fashion. All right, I just wanted to show you that real quick. Let's go back to the 5 minutes so I can tell you about this trade real quick. So we manipulate once. This is twice here. They do it again for the third time. So what that's telling me is, like, if we're manipulating below and above this level so much, A, they really don't want to come down and stay down, and B, they're getting ready to gear up to make a move. Because all this right here, this is technically consolidation, right? I'll show you later, but you can see how even though it's going up and down, it's staying within a certain range. Like, I could draw a rectangle around this. And then the last, they do a nasty manipulation on this last sequence where they do a bunch of stuff down here. This is where they really try to confuse you because they have multiple closes below the level that we're referencing. And it's a lot of noise, so you can get confused, right? But this is where I saw, and I was like, you know what? I need to switch my bias. I saw that we wicked into the level, not closed below now. Remember, it was 4 times that we closed below, and then now that the market opened, they started wicking into it. That let me know they were gearing up to take off. So they did 1 wick, 2 wick, and once they did the 3rd wick and I saw this was coming up, that's where I made my entry. You can see we made a nice push up, closed above. They had a bullish volume imbalance showed up here where they gapped up on the next 5 minutes, and then they pushed up even harder, broke this trend line here, and I ended up selling right around here, around this high, which was the perfect place at this point in the day, in the morning, because after that they sold it down, came all the way back down to my entry. I would have been upset. Now look, they wicked into it again and then broke this high, went even higher. Then they did the whole sequence that I was telling you about that I was waiting and expecting, where if we go on the, I think the hour, you get a close above, right? Let me see. They showed it better on like the 32 minute, I believe. Yeah, so they closed above here, but they didn't sweep the highs of this candle. They did it here beautifully. They closed above, swept the highs, boom, right? Draw a line right there. They swept it right there. They swept the highs, and then the highs are right. Hold on, where did I draw that? Oh, right here. Make sure I know I'm on time. They swept those highs. Look, they swept it aggressively. And then look at that beautiful move to come down to get support off of this trend line, which led us back up. Now we're currently right up on the cusp again of the discount level. So I'm interested to see what happens next. So that was kind of the context of what happened today when I entered my trade for SPY. I appreciate y'all checking into this video. My goal is to show you more both paper trading and real live session tradings in the future, so you can see the analysis on what happens and what takes place. Hopefully I can make an actual video highlighting the live trade, just not me talking about the live trade. So that is it. Remember, donate to the Cash App if you feel inclined to do so. Cash App is MoneySign, MINEDIALOGUE, which is Mind Dialogue, and then email is minddialogue.business@gmail.com. I appreciate you folks. Enjoy the rest of your evening and night on purpose. And y'all have a great rest of the week. Fun Fridays coming up. Love.